Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture. Me, Ryan Huang. And we are looking at the latest in the currency world. Off the back of the latest FOMC meeting, the Fed has started the year with 2 straight pauses after cutting 3 straight times in the fourth quarter of 2024. And the latest decision was widely expected, with the US dollar now posting gains against most other major currencies on Thursday. What can we expect for the rest of the year for the US dollar and other major currencies against a backdrop of a tariff war and other uncertainties? Let's check in now with Joey Chu. She is the head of Asia FX research for HSBC. Joey, good morning. Happy Friday. How are you doing?
Very well. Thank you so much, Ryan. Good morning to you too.
Hey, always great to have you on, Joey. Let's start with the big picture first with what's happening with the US dollar. Broadly, we are looking at a lot going on in the global picture. You've got a tariff war, but yet FOMC, at least Fed Chair Jerome Powell, is painting a rather confident outlook that it's not going to be derailing their plans to have 2 more rate cuts on the table. How is this going to play out for the US dollar?
I think for the US dollar, a lot of people are right now concerned about US growth, be it from tariff risks or from, the recent cuts in government payrolls, etc. So even though Powell sounded quite confident in his remarks, people are focusing more on the fact that the Fed, the committee as well as the staff actually cut the growth forecast for this year. So there are a lot of concerns about growth, and that is preventing the dollar from strengthening despite the tariff risks that are looming, coming 1st or 2nd April.
Yeah, we have a lot of talk about a recession. What is your view? What is the likelihood of a recession?
Yeah, we don't foresee a recession. I mean, there could be a slow patch of growth, but what we are seeing in the data is actually very confusing because the sentiment data is actually really weak. And even here, you can divide it into sentiment amongst Republicans versus sentiment amongst Democrats. So there is quite a clear divide when it comes to sentiment readings. And then on the other hand, we have hard data. So like data that is not related to sentiment, but just more like measuring what's going on with retail sales or industrial production. Actually, all this are not painting as bad a picture. So really, there's a lot of uncertainty and mixed picture going on in the U.S. data. But overall, our view is that actually the U.S. economy is not going into recession.
Okay, just looking at the U.S. dollar index, we are looking at year-to-date down over 4%. What sort of movements are you looking at for the next 12 months?
So, yeah, we have acknowledged that there's been some really a big drop in the dollar, in the confidence of the dollar. And at the same time, also very importantly, that there's just been this increase in confidence regarding some other major currencies, right, like the yen and the euro. So, the 3 things combined have led to this weakening of the dollar index. So our view is that some of this increase in confidence elsewhere, like, for example, Europe, after their Europe moment whereby they decided to get together to really boost up their defense, that is something that cannot, that's a structural change. That is a big change. So we need to acknowledge that. So therefore, we have sort of revised down our dollar bullishness. We are still seeing dollar to increase, but we have tempered that magnitude of increase that we are expecting for this year.
Yeah, we are seeing some strength in other major currencies. And on that point, Europe is seeing a lot of news, at least some excitement around what's happening in Germany with that vote by the parliament to overhaul government spending. That's caused the euro to see some gains. Some are even saying it's time to make Europe great again. So that's boosted European stocks, sending German shares to near record highs as well. How much momentum is there going into the euro for the rest of the year?
So our view is that, this is a really important development. That's why, we have changed some of our forecasts. But at the end of the day, we feel like, a lot of this is in the price currently, right? I mean, it can still sort of reduce the downside risk to euro going forward. But, as far as the economic implications are concerned, these are quite long term. When it comes to defense spending, it takes a long time, first of all, to spend it. And then second of all, it takes a long time also for it to trickle down into the economy. So it seems like, the recent rebound in euro has already captured or already reflected a lot of the anticipated gains that we can see in the near term. So our view is actually that euro sort of stays sluggish around recent levels, and then maybe in the second half of the year actually takes another leg down after the tariff hits eurozone.
All right, in terms of central bank action, we've also been keeping an eye on the Bank of Japan, which kept rates steady at 0.5% in a unanimous vote. And of course, they've been quite focused on the potential impact of Trump's trade policies on their economy. What's your expectations on when they could possibly raise interest rates?
So our view is actually that they raise rates about once every half a year. It's quite a stable pace, and we don't think that they actually necessarily have to derail this pace. They might have to adjust it by 1 or 2 months, if and when you get some volatility in the yen. So, for example, excessive yen weakness tends to lead to a little bit more hawkish talk and potentially even a little bit of bringing forward of this rate hike path. But generally, we expect them to go once every 6 months until they reach, around the lower end of their so-called neutral rate zone.
All right, looking at one of the top currencies for 2024, actually the top Asian currency last year was the Malaysian Ringgit. And to some degree, there's been some cautiousness around it with what's been playing out with the trade wars, especially on China. To some degree, that's weight on the ringgit. What's going to be the picture for the ringgit going forward?
Yeah, the ringgit last year did really well, partly because of government policies to ask, the government-linked companies to bring back dollars. Actually, that policy is still in play, so that is still acting as a bit of an anchor. And then on the other hand, I think recently investors are quite excited about Malaysia because they are looking at pockets of growth. They are like independent of tariff risk. So, with Malaysian government actually recently trying to do some investments or, structural projects, long-term projects, like, for example, the economic zone with Singapore too. This does sound like it's a good story to latch onto that is not too related to tariff risk. So I think that's why, ringgit is pretty much resilient. So yeah, we do expect that to continue, that the ringgit can actually be one slightly better performers in Asia. But against the dollar, ultimately, there are still some tariff risks to think about and still some contagion from, the weaker currencies in the rest of Asia. So overall, we still have a modest increase in dollar ringgit.
Yeah, to some degree, Singapore shares a few concerns on the trade front as well, with all the trade policies potentially weighing on exports and the wider economy. Where does this leave Singapore dollar, which right now is at 3.31 against the ringgit, and against the US dollar, we are looking at 1.334.
Right. For Sing dollar, look, the MAS for the longest time has had this currency appreciation policy, right? Especially during the high inflation period in the last few years. But in January, they actually tweaked that policy to target a slower rate of appreciation. And I don't think they are done. I think they will continue to actually tweak that policy to target an even slower rate of appreciation. So all this will eventually lead to, I think, dollar Sing going higher.
All right, a great wrap-up of where things are going in the currency world with Joey Chu. She is the head of Asia FX research for HSBC. Joey, thanks as always for your time and insights. Have a great weekend in advance.
Thank you so much. Thank you.
All right, catch up with you again soon. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.